Welcome to the Johnston Grocke monthly update. I'm here with Kathy, Andy, and myself, Rhiannon. We're going to update you on everything going on in the finance world. And there's been a bit going on, especially with all the events going on in the world at the moment. So I'm going to throw to Kathy, who's a financial planner here, and she's going to tell us what's going on in her world.
Thanks, Rhiannon.
No worries.
Lots going on. So this morning's market update is all about providing you with overview of key events, and we've got 3 of those that we're going to talk about. So firstly, the cash rate, and then obviously the big obvious one, the US election.
Yes, yep, that is the big one.
And potentially good news with a potential coronavirus vaccine. So starting with cash rate, so last week the Reserve Bank announced that the cash rate was being dropped to 0.1.
Lowest in history.
Yeah, crazy.
Yeah.
Great news for borrowers.
Not so good for your clients.
Yeah, for pensioners and savers, that's not such great news. Yeah, so, and we expect those low cash rates to stay for a while. The RBA has come out and said that with inflation sitting at around 1%, they're targeting an inflation rate of between 2 and 3, and sustainably between 2 and 3. So the expectation is that cash rates are going to be low for potentially 2 to 3 years. So we're not.
Which means people are trying to look for returns that maybe not aren't there.
Yeah, that's
in
it.
their
We're not
portfolio.
expecting to see them from cash and term deposits, that's for sure.
Okay.
Yeah, so we're going to see very low interest rates. We have been seeing very low interest rates for cash and term deposits. And we do urge anyone who's looking to seek higher returns from other non-cash assets to actually get advice on that before they commit to anything, because there are risks involved and cash does play an important part in your portfolio.
And when you say non-cash assets, is that like shares, Kathy?
Yeah, so shares, property, anything like that,
Okay.
commodities, those sorts of things.
Cool.
So anything that's not cash and term deposits, even bonds.
Okay.
So it might be saying, I guess, people are wanting more return, but they've got to understand there's also risk that comes with that. They're both mutually
exactly.
linked together. You can't have one without the other.
Exactly. Yeah. Yeah, and cash does play an important role. So, and then the big news, the US election. I'm trying to take a neutral tone.
Yes, yep.
Provided some good memes, though.
It did provide
Good memes.
Yes, I saw some which I'm not going to repeat, but they were hilarious. So Joe Biden obviously been called the winner earlier this week, and on the back of that, global stocks have reached record highs.
Wow.
That shows confidence, obviously, that things have said, uncertainty has been reduced and confidence is built back up.
Yeah. So essentially, on the back of expectations of improved global trade and more traditional leadership in the US from Biden compared to what we've seen from Trump, obviously. So the expectation is that it will still be that the Republicans will control the Senate. So any of those major changes that Biden was potentially going to make may not get through. Okay, so, and the result of that is that we expect moderation of policy agendas. So it's a little bit of a...
Again, back to a more stable environment.
Much more stable environment.
Which markets might like. So that'll maybe play out with things like international trade with China, and that we might get some more politically acceptable trade terms and getting back, even there's a bit of volatility at the moment with discussions of international trade, it might settle down a little bit. Yeah,
that's the expectation, Andy. And but also it could be that a slower economic recovery as well.
Okay. Interesting.
And then the third thing, what I'm really excited about anyway, is a potential coronavirus vaccine.
Yes.
So Pfizer have come out and said that they've got a vaccine, and the late stage trials are looking really positive. So 90% vaccination rate there.
That's good.
Yeah, so, and that's had a positive effect also on global markets. And so 3 big things this week.
Awesome. Thank you, Kathy. That was a
No
lot to cover. I
problem.
did
Yeah,
think there
it
was a
is,
bit to
yeah.
cover in your
Big
world.
meaty stuff.
Yeah.
Yeah.
What's happening? Awesome. Thank you.
No problem.
Andy, what have you got to update us on?
Well, more of a look back a little bit on what's happened over the last year and what that really means in a bit of a reflective sense. So what I've come to sort of see is that people haven't been great at understanding the economic environment and what it means. So when the going's good, nobody worries too much. When the going's bad, people actually get shaken up. And what I think people need to do a little bit is get a bit of mentoring in their financial world. So it isn't specifically about how much super I should get, or maybe do I get the best home loan. I think there needs to be a high level discussion for people, and maybe for people and their children. Financial mentoring. What does it mean? What am I actually trying to achieve? How do I get increased financial literacy in my world? And how do I get the best outcome? And what does that mean in a lifestyle sense as well? So this is about general discussions here, and we've got people here who can actually lead you through financial literacy and develop your skills, so you can actually be either self-directed and go do things yourself, or come and use us for the skills that we've had. So a little bit of mentoring, I think, would go a long way in this uncertain world, I think.
Have you found since COVID hit that a lot of your clients have sort of scrambled when they could have maybe perhaps planned a bit better when things were good?
Yeah, I think it really brings out that you do assume that maybe clients, you think they may know more than they know, and when the questions come out, you realise, hey, maybe there is a gap of knowledge here that we're assuming that our clients know, and we're saying to you, look, reach out. If you're uncertain, ask the question. There's no such thing as a dumb question. And if we can reduce that uncertainty, I think that's a good thing.
Yeah, great. Did you have any questions, Kathy? Or?
No, I think that's
Yeah,
important to, like, financial literacy is important for
Yeah, and it's not taught in schools, so
No, it's not. No.
Through life
Such-
experience
yeah.
and a lot of
Such valuable knowledge.
yeah.
You really make quite a big difference over your lifetime.
yeah. Awesome. Well, thanks, Andy. I'm going to wrap us up today. So I'm just going to quickly drop on the RBA rate drop that Kathy touched on, because obviously it does affect the mortgage world. So where most of the banks have dropped their rates, fixed and variable, we are seeing a fixed rate, 4-year fixed rate at 1.97, which which means that the banks don't see recovery on that interest rate for another 4 years. So it is a good time to fix, because if you can fix that low for 4 years, you're sort of set at the moment. So yeah, if you want to have a chat to that, let me know. I know I harp on about this every time, but the banks are very slow. Westpac are at 30 to 33 business days, which is over a month. The First Home Low Deposit Scheme has new places released. So if you are looking to secure a place in that, let us know. If you don't know what it is, give me a call and I can explain it to you. Just really quickly, it means that you don't have to put as much deposit forward, and the government will go guarantor for you. So it is a nice little thing that the government is offering. And a few of the banks are offering 85% LVR with no LMI. So that's really good if you've got a bit of deposit and you just need to make up that last little bit. We can look at 85% no LMI. So that's all from me and all of us. Have a great day.